You buy insurance so you'll be protected, right, when there's a disaster. Here's the thing, though. Not all policies or insurance companies are equal.
This year's flooding in one city in California is an example of how people can be affected by the same event and still get very different responses from their insurers. Julie Watts of our San Francisco station KPIX has the story.
For many in Capitola, it still seems like a bad dream.
People were trying to walk against the current.
While the coastal community is no stranger to flooding, this time there was no warning.
It usually comes up from this ocean or up from the river, and we have plenty of time to sandbag. But this came the opposite way.
That's because this was no typical flood. Engineers blame an old pipe which unexpectedly broke during an average-sized storm.
That next day, we just shoveled mud. All you did was shovel mud.
But the following day, a larger storm rolled in. And with no pipe to control the water, it turned Capitola Village into a lake. In its wake, a city filled with mom-and-pop shops already on the brink.
It was very emotional for a lot of people down here.
And they soon realized the flood was just the beginning of their nightmare. Next, FEMA denied disaster relief. Then many insurance companies did the same.
The people who had flood insurance were thrilled because finally their flood insurance policy was going to pay off. Until the insurance company said, no, we don't think it was a flood, we think it was a broken pipe. So then they turned to their liability. Oh no, we think it's a flood.
Following the flood, Karen Hanna was one of the lucky ones. Today, the Craft Gallery is back in business thanks to her small private insurer, Golden Eagle, which found the broken pipe to be a covered cause of loss. But for others,
it basically broke my back, emotionally and financially.
David Ross isn't talking about the Capitola flood. He's talking about the insurance response to the damage it left in its wake.
I don't have the funds to go on.
His dreams of franchising the popular Carousel Taffy store have now been crushed. His savings spent repairing flood damage because Allied Insurance denied his claim. And he's not alone.
It was just like a lake in here.
The Kincaid Gallery's claim was also denied by Allied, a subsidiary of the Fortune 500 company, Nationwide.
Nationwide, who's on your side? Not in this instance.
Policy lawyer Jerry Mannion reviewed both policies for us, along with insurance advocate Amy Bach.
How is it possible that two insurers can come up with two completely separate findings for the same disaster?
Well, they would tell you we have different policy language.
But the primary difference they find is the efficient proximate cause, or what the insurer says caused the loss. Allied initially denied the claim, stating the damage was due to surface water, a policy exclusion. But engineers point out that surface water was caused by a broken drain pipe.
The water would have been controlled had the pipe not broke. It's really due to pipe failure.
FEMA contracted engineer Clark Stoner says those findings have been widely reported. And Mannion points out when it comes to damage due to pipe failure,
that is a covered claim.
But when the Kincaid Gallery reminded Allied of the drain water damage coverage in its policy, the company sent a second denial, this time citing what experts say is an obscure clause that limits coverage 10 days before or after a flood.
Which is when you're most likely to have this exact loss.
Mannion says in 34 years, he's never seen coverage that limits drain pipe damage before a flood, since drain damage is likely to cause a flood.
That's the perfect example of hidden fine print legalese exclusion.
And Bach points out, in order to enforce an unexpected clause, Allied or any other insurer would have to prove it previously made it clear to the policyholder. We brought this to Allied's attention and pointed out it only limits coverage for sewers and sump pumps, not drain pipes. Allied's response? The facts do not support the cause of the flood was mechanical failure of a pipe.
From a practical standpoint, the only thing you can do is sue them.
That's a tough one.
Back at the taffy shop, that news is heartbreaking. Unless he sues Allied, David Ross is out of options.
I'm not going to have it anymore.
David has now decided to sue Allied, and advocates advise when taking on a big insurance company, be sure to hire a policy lawyer with an insurance background who agrees to work on contingency. Jeff and Erica.
And Julie, anything else specifically that consumers can do to protect themselves here?
Yeah, well, you know, this case really demonstrates the need for a good agent or broker to help you pick the right policy to begin with. Someone should have noticed that clause in the policy, and also a good agent should help fight for you when you need them. And we should note there were many positive stories about insurers actually going above and beyond for people in Capitola. That prompted some to switch over to those insurers. Advocates warn against that, however. They say you can't predict future performance. Based on past performance, they may not necessarily pay out following the next disaster.
Interesting to think about that. Julie, nice to have you with us this morning. Julie Watts of KPIX from San Francisco. Thanks again.